It's on, babe? I don't see it. Hang on. No, I see it.
Yo, what's up, everybody? I'm gonna go ahead and start this in like a minute or two. It's gonna be brief, but I'm definitely gonna be dropping some nuggets, so just stay tight and give about a minute or two. All right, guys, I'm gonna go ahead and get this thing going. So let's recap on two things: on the USD and peso and why I lost that trade, and let's talk about why we're in profits on USD JPY. So, we have two factors, that I've been watching as far as the Japanese yen. The Japanese yen has been weakening for quite some time. As you can see, all JPY pairs have been at a nonstop, it's been going up, meaning the JPY pound pair has been weakening. And, now it's time for its strengthening. They just had the Bank of Japan meeting, and they kept the interest rate the same for next year coming in. And, they have a really positive outlook as far as the Japanese market strengthening. So it's time for the Japanese yen to finally come around and strengthen. Then, we got the other factor. We got the U.S. dollar. The U.S. dollar has been strengthening. So you have a pair that's been weakening and a pair that's been strengthening, correlating into this large bullish movement that USD JPYs came into. Now, we're kind of at a spot where it's kind of, decisive on what it's going to do. I mean, technically, the market is still bullish because even though we are getting highs and then lower highs and lower highs and lower highs, to indicate a downtrend, we need lower lows. And what's been happening is we've been getting higher lows but lower highs. That would form us this pendant, as you see we got going on right here. So we have our little supply and demand zone going on right here. Went into consolidation. All right. It broke out of this little pendant right here, broke out, and then came down, spiked down, broke out on the sell side, retrace. So what do I think is happening here? So if there's a thing called whiplash, and if you guys know what a whiplash is, kind of getting screwed both ways. And usually this happens to a lot of Forex traders. So for example, let's go back in the future, in the past, and let's say we were watching this, and then we saw this, and we're buying, right? And then we see this, then we're selling. All right, so now we've gone in twice now. All right. And then you got burned again, and it retraced back up, and then it's going up, and now you're like, crap. And now you're scared to even, do anything. But then you end up buying, and then you see it break, and then you buy. All right. And then it comes back down and breaks it again, and now it's kind of slowly trending down. You're like, I'm not touching this. 95% of traders probably aren't trading this pair if they got whiplash. So if they got whiplash on the buy, then on the sell, then on the buy again, they probably didn't get in on a sell again. I noticed this pair. See, this is why you don't need to be staring at the market 24/7. The thing that's helped me a lot, guys, is coming back at a random time in the market and finding it at that sweet spot, right? I would have probably been tricked as well, by looking at technicals. I could have been saying, man, I could have watched this, but I ended up coming back into it about right here. I came and I saw right here. I saw the whiplash. I said, you know what? I think it's going to be a sell due to the reason that we are getting a lower low. We're getting lower lows. I got a lower low here. And then, we're getting lower highs. And now this pennant, I'm thinking to break it on the sell side. Then I have the supply and demand zone that it was being tricky. I also saw it leaving the supply and demand zone and then retesting 3 times. You see how it came back into it, then retraced, came back into it and retraced, came down, came back up, retraced, and now it's coming down. I don't think it's going to come back into the zone. And if it does, it's for a retest. So I think it's going to break out. So it already broke out of this pennant, and then there's also another potential trend line from this point to potentially right here. Another reason why I sold is because from bottom up, it retraced right at this 38.2 Fibonacci line, and then from top down to right here, it retraced right at the 50, and then it broke through the 38.2 right down here, retested the 38.2 about right there, if you guys can see that. Retested this 38.2 right there, now it's dropping. That's a good indication that this is going to be a bearish movement. Now let me go to my MetaTrader. There is the squeezing of the bands. Some big move is about to happen. So as you can see, when the band squeezes and it consolidates, look what happens. You see how the band squeezed, and then look what happened. Bang, like a rubber band shooting. It just lashed out. Lashed out hard. And that's a nice 376 pips right there. This whole movement. All right, now, moment of truth. The market is going to be doing something big. And I'm seeing this is going to ride the bands all the way down. All right. So this was the high of the day. This was the low of the day. 2 things can happen. Fake out on the upside, might break the high, and then come back down. Might go against us about 15 pips, to break the high of the day. Most people who are breakout traders probably got buy orders, pending orders right above this yellow line, right above this high of the day. So then, so when it comes up, it hits these buy orders, and then once they trap these guys, because if it is a sell, they already know it's a sell. They already know what they're gonna do, but they want to make some money before the market gets moved. So they'll go up, hit the buy orders, come back down, get these guys stuck in a buy, and then crash, either make them blow their accounts, lose their money, or, hit their stop loss. All right. So, or it could just consolidate, and then we could just have a breakout, a really nice breakout coming into the next week. of a nice sell. So this is the last signal that I'm giving out, but it already broke this pivot level. Pivots is a really good indication of market structure. So let me go to my pivot template. All right. So here's USD JPY. And what we got going on is I see it broke the pivot. So you guys see this pivot line that's right here. It came up, broke, retested this pivot. So now look, this retest that was previously was also the supply and demand zone. So this was a really good area where it retested. Also, this is also a market profile indicator. What this means, this tells you where a lot of the money has been trading. So in a time of consolidation, a lot of orders are being placed right here. And this was yesterday, right? The smallest orders caught this nice sell, right? There wasn't much volume. That was a nice 60 pips. All right, and you can see where the people are moving money, and most of the money is being moved when it's in consolidation. What I like to see is I like to see where the market has less volume, and let's see where it was coming in. And as you can see, right here was the less volume. This could be just like this, where not many people caught this sell, and then it could continue to drop. Coming into our technicals. This would have been that perfect, whoever's like those beast traders probably caught this, right? The hedge funds, those type of guys probably put their money right there, and everybody else is like trading about right here. And you can see that this is where most of the money's been trading. Now, you see how it broke this pivot level. Now this is now what we would call resistance. All right, this is our resistance now, and you can see it retested. So that's nice. I like to see that. Where can I see JPY coming? We have a few areas of interest. Right now, what is the JPY pair doing? These pivot levels mean of significance even back into the day. So each little line is considered a day. So this is today forming. This whole line is going to be today till next trading day. And then you have this was yesterday, the day before, the day before, the day before. So each level is a day back. So we can see right now the market's about right here. So right here, wow, that looks like some pretty good support, right? This is really, I like using pivots because this can help me see how the market is swinging in levels. So this is 1, 2, 3, 4, 5 days ago. So this pivot level that formed 5 days ago is now of significance right now. You see how the market is consolidating between. So what I want to see it break this pivot level. I want to see it break this pivot level and continue to drop. And then the next area of resistance is down here, another 20 pips. Okay, this is going to be a next structure level. All right, so let's look how important these can be. Let's see if this is of any significance. So this is at 117.250. Let's go back here and let's try to find 117.250. Wow. So look at 117.250. It is about right here where the market retraced, but it's also below this pennant. So if the market does come to this next level, it would have broken this, right? And if it breaks this, what does that mean? That's a good sell. So I could see the market coming down all the way down, right? And since this is a major level right here of Fibonacci, let's just say safe that this is probably where we're going to see a little bit of retracement down here. So it's going to come down here, and then it could come back up to retest this trend or this, support or resistance. You can come back and retest and then, get something going on there. We get a nice little sell coming into next week. So that's my analysis for UJ, and that's kind of where I'm seeing it going. So now let's go back to USD MXN. You know, I called the signal on a sell, and here's what happened. If we go to the daily, this is what I saw going on. I called the sell about right here. All right. One or two things was going to happen, guys. It was going to respect this daily pendant. All right. And then come down. We could have caught some nice pips. But unfortunately, the dollar news that came out was bullish. And I honestly knew it was going to be bullish. But as a trader, this is what happens a lot. You know, I'm in so many groups, guys. Like, I'm in so many trading groups. I talk to a lot of great traders, and what happens was I took input from other people that made me doubt my own analysis. And guys, this happens a lot. Guys, you can mark up charts. You can, have this intuition that tells you something, it's going to be a buy. And most of the time you're probably right. But what happens? You end up psyching yourself out because, we don't think great of ourselves. We're human. And when we look at someone else's input, we can get easily influenced. You know why we do this though? I'm gonna tell you why that we do this. We do this because it is so much easier to put the blame on somebody else than on your own. So let me explain that in another perspective. Let's say I said it was going to be bullish, but let's say the news came out negative and the dollar dropped. That's my fault. I'm going to feel a lot worse. But what happened with me is my subconscious is telling myself, well, you took advice from somebody else. You knew it was bullish. I'm not taking blame for what I did. But you know what? It is my fault. It's my fault I did. It's not nobody's fault. It's not nobody's fault that, even though someone may have said something, it's still your fault. And guess and it's my money that I'm playing with. At the end of the day, you're in control of your own money. It is so much easier to put the blame. So that's why a lot of people, when it comes to signals, it's really, I've seen a lot of people, go through a lot of stress giving out signals because of these people that are taking the signals. They're trusting you with their money. And it's so much easier to take signals and to, do your own analysis and take the trade, because guess what? If you're wrong, you're wrong. But if you take a signal and it's wrong, they're wrong, right? That's how we'd like to think. But when it comes to trading, you cannot think like this, all right? This is why at the end of the day, you're in control of your risk management and you're in control of your money. And with me, what happened was I felt a trap of this psychological game. I'm still working on my psychology. It's 95. That's what the whole point of this. It's 95% mental. So if I would have trusted my instinct, I would have made money, and the people that took my signal would have made money. We would have shorted the dollar, and we would have bought the dollar. Either we would have bought, we would have bought the pairs, and so I would have looked at the market in a completely different perspective. I would have looked at it was going to break this, and it was going to be a nice buy. But that's not what happened. I make mistakes. I'm going to move on. I'm not going to let it get to me either, because your mental strength has to be strong as well, and that's part of the game. Losing is part of the game. If you let a loss get to you, this is not the right industry for you. I'm just telling you guys based on how you're supposed to think in the markets. I'm doing this because I care about you guys. I want you guys to be successful. I want you guys to think the right way, and it's really all a mental game, guys. So guys, really understand that every single time you place a buy or a sell, it's your trade. No one's forcing you to press buy or sell at the end of the day, right? Nobody's forcing you to do that. So you guys need to once you start taking responsibility of your trades, you'll do two things. One, you'll do your own analysis, which is always good. Even if the signals are always great, still do your own analysis. And then two, you'll end up trusting yourself more, and you'll also be able to use risk management, because how would you feel if you lost you'll feel like crap, right? But if somebody else loses your money, I mean, you still lost the money, but you'll feel less crap because you're putting the blame on somebody else. But guess what? That money's still gone. And this is all a numbers game, guys. Your account's either going to go up or your account's going to – it does not care how you feel, how you think. It does not care. All right? So I just wanted to explain that to you guys. So that's what happened with USD MXN. Let's look at the dollar real quick. Okay. So the dollar is still respecting my little channel that I got going on here. Remember, guys, I showed you guys this on Tuesday. It was like somewhere around here. No, it was about right up here. And so I don't know if I'm going to be giving signals next week due to it being really close to the holidays. Guys, the market is really slow, aka no volume. There's no volume. Literally, the end of the month is literally going to be for the suckers that get screwed over by the market makers. The real traders are probably not trading. I'm going to be honest. All the top, like a lot of millionaires that are investing their money or that are, that are significant to the market, they're probably not even going to touch this market. So the market is literally going to be literally like hell. It's going to be slow, and it's just going to be a bunch of traps. So guys, be very cautious if you do trade during the holidays. I don't know if I'm going to be calling out a lot of signals, but if we see a nice setup, we can go in small. I guess if you do trade, reduce your lot sizes. Reduce your lot sizes because at the end of the day, technicals will probably still follow. Just don't fall trap for, market maker stuff. Don't go in big coming into next week. Take it real slow. Take it real slow and just kind of perfect your craft, perfect your skill. Try to get, focus more on entries as far as trading goes, but don't try to make a lot of money during the holidays because there's not a lot of volume. So guys, I'm going to pretty much wrap it up with that. I appreciate everybody that came on this call. You guys have a wonderful day.